My guest at this time is Vance Ginn. He is a senior economist at the Texas Public Policy Foundation, where he's also director of the Center for Economic Prosperity. While much of Washington and the rest of the country was riveted to the Senate Judiciary Committee in recent days, the two important things happened on the House side as well. One is that the House passed what they're calling Tax Cuts 2.0, which makes the individual tax cuts passed at the end of last year permanent, or would if the Senate goes along. Also, there will not be a government shutdown here at the end of the month as a result of the House and Senate coming to terms on a temporary spending bill that takes us to December, but doesn't do a whole lot to address spending. And Vance, thanks so much for being with us.
Thank you, Greg. It's a pleasure to be with you.
Well, let's start with the tax cuts, 2.0 as they like to call them. I'll just read from Politico on Friday. The House on Friday passed a bill to permanently extend tax cuts for individuals and unincorporated businesses included in the recent GOP tax overhaul, even though not much more is expected of the measure legislatively, meaning that it's not going to get very far in the Senate because as of right now, it would take 60 votes in the Senate, which they don't have. So, first of all, if this were to actually become law, how significant would it be?
Well, I think it would be significant because right now, as you mentioned, a lot of these individual income tax cuts that were passed last December, they would expire in 2025. And so that changes a lot of the calculations as you're budgeting for the future as an individual of what those tax rates are going to be. And as we know from previous experiences with temporary tax cuts, like under the Bush tax cuts, is that you don't change your spending habits or your savings habits as much as you would had those tax cuts been permanent. So I do think that would be an essential part of the Tax Cuts 2.0 is to make them permanent.
Obviously, tax cuts have had sunset provisions for a while now. I believe it's known as the Byrd Rule. But usually when legislation gets passed, it doesn't have that. So why do tax cuts usually have it?
Well, tax cuts usually have it because they have in place the situation where they look over a 10-year period and see how much this will increase the national debt by, and they'll have some benchmark that they'll want to use there. And if the debt increases by more than that, then they can't make it a permanent cut in taxes. So, for example, in this particular case, over a decade, the Tax Cuts and Jobs Act passed last year would have increased the national debt or the overall debt by $1.5 trillion over 10 years. Now, had they made the individual tax cuts permanent, the increase in the national debt would have even been higher, meaning that they couldn't have passed it under reconciliation like they did last year. And so usually it's about the amount of increase of national debt that will be added, and so that's why they'll make it a temporary cut instead of a permanent.
Vance, often when we hear about business tax cuts, and those were permanent, the corporate tax cuts last year, it provides certainty. So there is certainty for, I guess, 7 more years on the individual side as well as the unincorporated business side. But assuming that the Senate doesn't pass this, which looks very unlikely, what does this type of sunsetting mean on the individual side? Does it change the economy a lot when there's not long-term certainty beyond 2025?
Well, I think that making the business tax cuts or the corporate income tax cuts permanent, where they lowered the corporate tax rate from 35%, which was the highest in the developed world, down to 21%, which puts us below the worldwide average of 22% on corporate income. Making that permanent was huge. I think that's having a positive effect for our economy, and it's contributing to more increases in wages, bonuses. More than 600 firms across the United States have increased pay in some capacity. And while the overall effects may not have be as great if they made the individual income tax permanent, I do think it would be beneficial. Like I said, if that's the way that it allows for more efficient budgeting to take place, whether it be for a corporation or for an individual. And so I do think that would be pro-growth.
We're talking with Vance Ginn of the Texas Public Policy Foundation. Let's get to the spending side now, sir. And this is from CNBC. President Donald Trump on Friday signed a spending bill that will avert a government shutdown despite previously calling the measure ridiculous because it did not include funding for a wall along the southern border. But ultimately what this does is punt the issue to December, and it keeps spending levels essentially where they are, which was jacked up pretty high, as you recall, back in February when they were averting a different government shutdown. So what's the lesson here?
Well, I think you've hit on it pretty well, is that we must get control of spending. as Reagan used to say, right, we don't have a revenue problem, we have a spending problem, and I think that's the same situation here. As we were just discussing the Tax Cuts 2.0, I mean, one of the things that I've been talking a lot about and doing a lot of research on is that we must control spending. Even with the last tax cuts that were passed, this year alone, the budget deficit is expected to exceed $800 billion and add to the $21 trillion plus in national debt that we already have. We've got to get control of spending. And so these sort of measures, passing a bill that's just going to punt the ball for a couple more months down the road and then have to go through this again is not an appropriate form of budgeting. We've seen this under Democrats now and under Republicans. It's been kind of a bipartisan issue of just continuing these resolutions that punts the ball down the road for a while. And it's time that we really get back into measures and ways to spend that's going to allow for longer-term budgeting along with getting control of the cost curve, because right now it's really out-of-control spending.
I know you guys at TPPF are nonpartisan and look at this from a policy perspective, but one of the hallmarks of the Republican Party is that they're the ones who are fiscally responsible. They can make the argument, of course, that with a very narrow majority in the Senate, what they would like to get done can't get done. But when you look at 2 years now of Republicans controlling White House, House, and Senate, and like you just said, we're staring at $800 billion budget deficits, is this a disappointment on their part?
You know, I think so. I mean, whether this was Democrat or Republican, we want conservatively fiscal policy, conservative fiscal policy. That's something that's worked out very well in Texas, where I'm based. It's something that we go through here every session. We call it a conservative Texas budget, to where we don't want the budget to increase by more than, the simple things like population growth and inflation. And they've actually done that in Texas the last two budget cycles. It would be quite a miracle, really, if they could do that at the federal level as spending has continued to exceed taxes. And it's something that we must get control of. I mean, look, we've got money that we're spending, a lot of money on Social Security, on Medicare, and these are issues that if not taken advantage of now and making key reforms, that we're going to potentially bankrupt the country, having higher interest rates, slowing economic growth. I mean, there's a lot of research on this area that shows that if you have a debt to GDP ratio, meaning debt as a measure of economic activity, above 80%, that you have slower economic growth, and we are currently above 100% of debt to GDP. And so that is telling me that we are having slower economic growth than we otherwise would have, even as the economy looks to be doing pretty well right now. Just think about how much more growth and prosperity that we could have overall.
Well, you mentioned the entitlement problem, and we talked about how the individual tax cuts are sunsetting in 2025. Medicare is expected to go insolvent right around that same time, maybe a year later, based on the latest government projections. So major challenges to come. But as always, Vance, thanks very much for your time today. We appreciate it.
Thank you so much.
Vance Ginn is a senior economist at the Texas Public Policy Foundation. He's also their director of the Center for Economic Prosperity. I'm Greg Columbus reporting for Radio America.